When it comes to investments, you need to have rules and principles in place in order for you to succeed. You don't want to just jump in, because let me tell you something. There's so many acronyms and so many things that people are going to tell you to do and so many contradictions. You're going to end up doing nothing. So in this video, I'm going to share with you some of the investment rules that you need to follow today in order to be rich. The first rule you need to follow is diversification. You cannot put all your eggs into one basket. The best thing for you to do is determine what industry you want to invest in. For example, it could be healthcare, it could be energy, it could be tech, it could be AI. All those industries have great returns, and you certainly want to put that in your portfolio. But you cannot put everything within those industries. You got to spread it out. And that's where the 60-40 rule comes in play. 60% of your portfolio in stocks, 40% in bonds. Hold on now. People are going to probably jump on me and say that's way too high in the 40% in bonds. And I agree with you. It just depends on your age. If you're younger, personally, me, I got 90 to 100. I don't really want to hold bonds. I'm young. I don't need to worry about it. I'm trying to ride this market to the end, baby. But you still need to understand the 60-40 rule. And the closer you get to retirement age, that is something you definitely need to keep in mind. And really, to simplify things, you can go with two things, either large cap or small cap. Large cap, just think of companies like Pepsi, Coca-Cola, McDonald's, Ford. They've been around forever. But with that being said, the risk is not that high, so the reward is not that high. But if you have that in your portfolio, you will have some stability. Now, when you think about small cap, these are more of the smaller companies that you don't know what will happen in the future. For example, Tesla and Amazon started out as small cap, and look at them now. So having some of those small cap investments in your portfolio in the end could pay off dividends. But if some of them don't, that's okay, because you're heavily diversified in your portfolio and you would do all right. My second investment rule is to have a long-term mentality. Investing doesn't happen overnight. And if it does, that's extremely risky and you're extremely lucky. Trying to replicate that again will get you burnt and you'll lose everything all over again. But having a long-term perspective when it comes to investments will allow you to calm, chill, because I'm going to warn you, the market is up and down, up and down. It goes all over the place. And if you're new to investing, as soon as you see it go up, you're going to be loving it. As soon as you see it going down a bit, you're going to freak out. And if you're not paying attention to the market and not understanding why it's going down, you're going to sell it. The ironic thing about it is you always hear the rule of buy low, sell high. But a lot of people do the complete opposite. Once the market is doing great, they start buying on the high. Once the market is having a little bit of turbulence, they sell low. And the reason why is they don't have a long-term perspective. The third investment rule is this. You need to stay informed with trends. AI right now is a big topic of discussion. You need to understand which companies are running AI and how AI is being utilized. If you understand what is going on, and really guys, I'm not trying to tell you to be on Fox News and to be on CNBC every single day trying to figure this stuff out. I'm not saying that. All I'm saying is read a few news clippings, tune into some finance channels, and see exactly what's going on in certain industries, because that way you know how your portfolio is gonna get impacted, especially stuff like remote work. You're talking about Zoom and all these things that came out when we were going from working in the office full-time to now working remote. And it seems like hybrid is going to stay. There's so many new technologies that came out that you want to be able to ride that trend. My fourth rule is this: set realistic and measurable goals. A lot of people quit investing altogether because in the beginning, they don't see nothing happening and they leave. You need to be realistic. If you're putting money into the market for when you retire, there is no need for you to take that money out now. Put the money in, let compound interest do its thing. Because with time and compound interest, you will make so much money. But at the same time, keep it measurable. After a few years, see what's going on. If you do not understand why your portfolio is not growing as much as it should, then get a financial advisor. You don't need to have one for your whole journey, but sit down with someone, have a conversation, and tell them, this is what I'm trying to do. Is my portfolio constructed the correct way for me to get there? And they will break it down to you and give you some advice and help you on your path to get there. Everyone wants to do things on their own, but there's some people out there who have the experience, especially for someone who's new into investing, and they can get you to the right path. But I will caution you on this. If they tell you something that you do not understand, don't do it. You need to understand exactly what they're telling you to do before you do anything. And my fifth investment rule, the most important rule of it all, because there's some stuff out there that I don't want to know about, but listen, I just have to. And that's cryptocurrency and Bitcoin. I don't like it as an investment. I don't trust it, but I'll be naive if I just deny myself to learning and understanding exactly what it is. If I educate myself and I learn what cryptocurrency is, then I know that I'm making the right decision. And that's exactly what I did. I started reading up on Bitcoin little by little, some simple terms, and understanding exactly why I don't want to invest in it. But I understand it and I got a better knowledge of it. And you need to do the same thing when it comes to investing. Every time you hear a new word continually being repeated, look it up. Do some research. Find out what it means. You want to stay on top of the education when it comes to investments, because as well, if you use a financial advisor or someone is giving you some advice on what you should do in your portfolio, you want to be able to understand and to articulate exactly what it is that you're trying to do, and you also want to understand what it is that they're trying to do. And also, if you're not educated, that leaves an opportunity for people to take extreme advantage of you, because you don't want to fall victim to any type of scams, because usually the people who get scammed the most are the people who lack education. So there you have it, guys. Those are my 5 investment rules that you need to start using today. If you want to get rich and you want to get wealthy and you want to help other people get rich and wealthy, maybe your mom, your dad, your siblings, whoever, your friends, educate them as much as you can. And knowing how to invest in yourself in all avenues in life will get you really, really far. So simple rules. Go out there and implement it and get rich.